Greetings and warm welcome. I'm delighted to have you here with me for today's installments. My name is Polly. If you have an inclination towards trading and aspire to secure regular gains, you're in the right place. In this presentation, I'll provide a comprehensive guide on the versioning and the Vortex indicator in your trading endeavors. Today, you're going to get to know the Truth Trend indicator, known also as the Truth Trend Index. Indicators are used in technical analysis to improve market readings and to help in the decision-making process about entering and exciting transactions. It is good to learn how they work and use the ones that suit you in your trading. The Truth Trend Index, known as the TSI in short, belongs to the oscillators. Traders use it to identify the trend and its reversal, as well as to determine the oversold and overbought areas. The indicator appears in a separate window beneath the price chart. It consists of two lines that run to the positive or negative territory. When it is in a positive zone, it means that bulls have control on the market, and the negative zone means the bears are in majority. TSI provides quite a lot of information. It can be utilized to identify the oversold and overbought areas, catch divergence and define the trend and the changes in its direction, and highlight price momentum in the short term. There are no strict rules as to when the asset falls into the oversold or overbought areas. The volume may differ for distinct instruments. One can be considered oversold and overbought near minus 20 or plus 20, another at minus 30 or plus 30. You have to do some research about the extremes the price reaches and decide what the oversold and overbought zones for this particular asset. Bear in mind that information about an asset in the oversold or overbought zone does not constitute a trading signal. You ought to watch for other signals at a TSI changing its direction back to the middle or signal line crossover. So let's examine the real-world performance on the Vortex strategy. To start, let's identify a suitable currency pair. Take, for instance, the yen against the Japanese yen. Overall, the conditions seem quite favorable for my strategy. The indicators are showing signs of interaction, suggesting the potential entry opportunity in the near future. And here you can observe the red line initially held a position above the blue line. It's spread to deep below the blue line, but then they quickly rose back up. At this point, I'm refraining from entering a trade as there is no distinct signal, and the situation appears uncertain. Let's explore other currency pairs. Across most currency pairs, the market appears relatively calm. But here we have the Australian dollar against the Swiss francs. This scenario seems regular and indexing. I might be considering sharing a $1,000 trade on the upside with a 5-minute duration. Now let me elucidate the reasoning behind the trend entry. So, our essential criterion were employing the Vortex strategy in the presence of the robust crossover in the indicator. The routing significant divergence gains of lines followed by convergence and intersection. Upon closest inspection of the chart, I decided that the blue line diverged notably. Subsequently crosses the red line and thus currently trending upwards, positioned above the red line. This presents a favorable entry point for an upward trade. Conversely, if the blue line had crossed behind the red line and continued its trajectory below, it would have signaled a trade in the downward direction. So in a sense, the new Vortex indicator is among several tools that process market data using a specific formula to yield interpreted outcomes. These indicators aid in assessing the market status, its exciting trend, and the likely direction of price movement. When used in conjunction with a true strength index indicator, it can potentially enhance the proportion of profitable trades. However, I must admit that I don't have a strong preference for TSI, so I opt not to incorporate it into my strategy. I base all my decisions exclusively on the Vortex indicator, which effectively pinpoints market trends for me. Essentially, the Vortex consists of two oscillators. It indefinitely both bullish and bearish trend movements and translates them into oscillatable trading signals. While it might initially appear intricate and familiar to newcomers, unfamiliar with the market fluctuation is actually quite straightforward. For instance, it offers a simpler approach compared to using moving averages because it constantly provides either a clear signal or not at all. This clarity makes it easier to determine the optimal entry points for trades. Moreover, it simplifies the trading by ensuring that the currency market never delivers negative data. Signals generated by the Vortex indicator are always either positive or negative. Trading with the Vortex strategy is uncomplicated, as everything becomes evident at the first glance. There is no room for ambiguity and interpretation or guesswork. If you're a novice, you can experiment with a signal filtering using the TSI indicator when the blue vortex line crosses above the red line and moves upward, simultaneously with the TSI indicator displaying a bullish crossover and upward movement, you open an upward trade. Similarly, for a downward trade, you wait for the blue vortex line to cross below the red line and move in a downward direction, while the TSI indicates a bearish crossover and downward trend on the chart. This strategy works optimally with a 5-minute trades on a 1-minute time frame when adhering to prudent money management principles. Let me emphasize that in any strategy and trade, you should never risk more than 5% of your deposit. You can allocate up to 5%, but it's even wiser to employ a smaller percentage. 2%, 3%, 4%. Why, you ask? This allows you to implement the martingale strategy, where you compensate for a losing trade by placing another trade twice the size. For example, if you incur a loss in one trade, you use only 10% of your deposit for the subsequent trade. Subsequent losses can be offset by a 20% trade. Constantly, after a few unsuccessful trades, you may be down by 30%, which might become challenging to recover from. Thus, it's advisable to limit your risk not to more than 5% of your deposit or even less. This approach ensures that you won't deplete your entire capital at once, enabling you to gain experience and recuperate from any losses. The currency market remains highly unpredictable, characterized by ever-changing circumstances and daily news events. Therefore, there is no silent indicator that can guarantee a 100% success rate. The ones I mentioned typically yield success rate ranging from 70% to 90%, with the Vortex indicator ranking among the most reliable. My apologies for decreasing. Meanwhile, the price has experienced a significant upward surge driven by a powerful impulse. I refrained from monitoring the chart because under the current conditions there is a little chance of trade closing at a loss. Let's wait for the final 40 seconds to see the conclusion result. With just about 3 seconds remaining, the trade concludes with a highly confident profit. I didn't even have the time to become anxious, even when the price moderately dipped after the trade has initiated. As demonstrated, the Vortex indicator performs admirably. So considering adding it to your chart and testing in your trading intervals. Truth trend indicator is a momentum oscillator used for trend identification and determination of oversold and overbought areas. TSI can be used to catch divergences, define the trend, and highlight the price momentum in the short term. Always use additional techniques to confirm trading signals and entry points provided by TSI. Thank you for your attention, and I look forward to your subscription to the channel. Don't miss the new episodes. I hope you find it interesting to follow along because it's interesting, right? Write me in the comments.